Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, welcome to the December 28th edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This is also the 224th all-time episode of Basis Loaded, which remains the most viewed weekly NDPSR update, and now is the longest running weekly NDPSR update. The days are getting longer here in the upper Midwest. Sun doesn't go down until about 3:47, so what better way to celebrate than the latest from the final NDPSR report of the 2023 calendar. Let's start with butter. This butter number coming in, $260.97. That's a big price. Represents a plus 11 to the CME 1 week average of $249.70. Now the CME was down 17 cents to get to that level, so we would expect higher than normal basis on a move such as that. It doesn't hurt that we traded 13 loads on the CME last week at essentially a 258, so that probably did a lot to pull that basis higher. But the move at the CME was a little bit more dramatic than manufacturers were willing to sell at this point. 260.97 at 11 over is well over our expected basis. So it'll be interesting to watch as we enter the new year's, as we've seen cream multiples turn lower, how long the manufacturer is able to cling to this higher than expected basis and this elevated price level in butter. Up next, cheese. We'll start with the blocks. 164.18. That represents a plus 4 to the CME 1 week average of 159.75. Now, plus 4 is higher than our expected basis, but this is narrower basis than we have had in recent weeks. One possibility for that lower than expected basis is the 30 loads that we traded at the CME last week. That's a lot of weight changing hands at the CME at a nice level. So that volume at the CME likely pulled basis down. It's interesting on the volume here on the NDPSR, still falling short of our expected 12.5 million. So with all that weight trading at the CME, end users passed or took a minimum on their previously negotiated NDPSR or CME++ contracts, because even with the 30 loads that we traded at the CME, the NDPSR volume still falling short and basis suffering somewhat. Next up is the barrel, 157.85. That represents a plus 4 to the CME 2 week average of 153.95. Situation in barrel, similar to the situation in blocks. We have this contracting basis. The big culprit may be the 62 loads that we traded at the CME last week at essentially a 140 level. So the lower level at the CME and all the weight that we traded at the CME, 62 loads is a big chunk. That's about north of 2.4 million pounds. So at 140 going in. So that pulled that basis off of its highs. Plus 4 is the low end of our expected basis, but of course, a significant reduction from the basis we've been experiencing as of late. With all that volume traded at the CME, the barrel was able to surpass the expected volume of 13.5 million. But still, similar to blocks, it looks like end users are willing to take the minimum on their CME++ contracts, as we're seeing a lot of weight change hands at the CME at a discounted level, causing the end users to maybe sit on their hands just a little bit. Now, of course, the only way that the basis contracts with all that volume at the CME is if the volume at the CME is coming from the manufacturer. What we're seeing here on the NDPSR report would lead us to believe that that is the case. Up next is whey, 42.01. So the whey increase in price continues. Although begrudgingly, the gains have slowed somewhat, but higher is higher. 42.01 represents a plus 2 to the CME 1 week average of 39.85. We traded 11 loads at the CME last week. So Moderate volume at the CME, nothing really to talk about there. 42.01 relative to the December 9th NDPSR reported price of 41.83 means that the manufacturer was still able to call a premium to prior week's NDPSR to move contracted levels, but that was it. That's all they moved. If you look here on the NDPSR, falling a little bit short of 4.8 million pounds, above our expected 4.5 million pound level, but certainly less than the 5.5 to 6.5 that we've grown accustomed to in recent weeks. And then lastly, NonFat 119.32, that represents a +2 to the CME 1 week average of 117.05. We traded 10 loads at the CME last week. The CME was down 1.5. Here we're seeing the NDPSR decrease only by 0.5 cent. So a little bit of a gain in basis in non-fat. Volume on the NDPSR falling short of our expected 20 million pounds. All in all, I'd have to call it an expected price on slightly lower than expected volume in non-fat. So this is week 4 of the 5-week December pricing cycle, currently getting December class 3, 1607, December class 4, all the way up at 1929. If you carry current CME equivalents all the way out through the 4-week January pricing cycle, currently getting January class 3, 15 even, January class 4, 1907. We here at Basis Loaded would like to wish you a happy and healthy new year. We will be taking next week off as I will be venturing south to the white sands of Mexico to get some sun on my head. Until 2 weeks from now, on behalf of Paige and the entire EverAg Insights team, thanks so much. See you soon. Bye.